Most people don't realize that you can take years off your mortgage just by using a feature that is already available to you. The feature I'm talking about is lump sum payments. It's part of your prepayment privileges. And if you use them correctly, you can save yourself thousands of dollars in interest payments. And the crazy part about all this is how few people actually take advantage of this feature, simply because no one ever explained to them how it actually works. So today, we're going to look at that. Most of the big lenders in Canada, the big banks, the credit unions, federally regulated lenders, allow up to 10 and sometimes 20% of your original mortgage balance as a lump sum payment to be paid per year without paying a penalty. And you don't even have to use that full amount either. If you want and you have a couple $1,000s, you can throw that directly at principal, and that will make a significant difference to your mortgage over time. But let's take a look at a quick example here. Let's say you have a $450,000 mortgage at 4.5% with 22 years left. If you make a $10,000 payment into your mortgage, that money is going directly at the principal. Not a dollar is going to go towards interest. So that one lump sum payment could save you or will save you over $13,000 in interest over time and take a full year off your mortgage. Now, if security or being debt-free is really important to you, you can focus on putting more money towards your mortgage. Let's say you put $50,000 from savings, maybe a couple bonuses, or money from somewhere else. That could save you over $60,000 in interest over the course of your mortgage and shave off close to 5 years. And the best part of this feature is that it allows you to decide how your extra payment helps you. The first option is to keep your payment the same and finish your mortgage years sooner. Whereas the second one allows you to lower your monthly payment to give yourself some breathing room in your monthly budget. Either way, the lump sum payment is going to give you way more control over your mortgage and far more flexibility. But if we stop to think for a second, this feature isn't going to be the best move for absolutely everyone. Think about if you carry some high interest debt. If you have credit card balances, car loans, line of credit balances, those are going to charge you a high percentage of interest. So you need to start there first. There's absolutely no sense in paying out 19% interest while you're saving 5%. But for those of you who are sitting on some extra savings, some bonuses, maybe a tax refund that isn't doing much, a lump sum payment into your mortgage is one of the safest investments that you can make. Because if your mortgage is, let's say, 5% or so, every dollar that you put down is basically earning you a guaranteed 5% return. Tax-free, risk-free. You're basically just paying yourself instead of paying the bank. And for those of you who want to know how to do all this, that part is so straightforward. The first thing you want to do is log into your lender's online portal. Then you want to look for something called your prepayment privileges or lump sum payment. Then it'll show you exactly how much you're allowed to pay down without paying a penalty. Like we said earlier, most of them are going to fit between 10 to 20% of the original loan amount. And that's going to be applied per year. And then the last thing you want to do is basically just choose how much you want to put down and just make sure it's in the allowed amount. And if you're not sure where to start on this, feel free to reach out to me, or there's a ChatGPT prompt that can really help you with this. All you need to know is the allowable percentage, your current balance, the rate that you're paying, your term, and what's left on your amortization. This will get you the maximum lump sum payment to apply to your mortgage, but it will also tell you how much you'll be able to save in the term as well over the life of your mortgage. Now, on another note, after all this, viewers, people watching might be thinking, well, if I do have some extra money laying around, should I pay off my mortgage first or should I invest the money elsewhere? And honestly, that's a fair question, something I struggle with, but it's a tough one for anyone else but you to answer because it completely depends on your situation, where you are in life, what goals you have, how much flexibility you really want, and what kind of reasonable return that you can expect to get somewhere else. The key to all of this is to look at what gives you personally the best peace of mind. Some people want flexibility, some want net worth growth, Others just want security and being absolutely debt-free. All of them are valid options. If you want to run through your mortgage scenario and get a second opinion on which might make the most sense to you, feel free to reach out. I'd be happy to help you guys. As always, thanks for watching, and I'll see you in the next video.